Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, January the 19th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Quite a bit of economic data here in the United States, not so much across the pond, but here in the United States, we did get building permits, which you guys know how I feel about building permits. It's a little bit of a misnomer. They were slightly less than what was expected, but at the end of the day, you can pull as many permits as you want. It doesn't necessarily mean you start building. So for me, even though that is a headline number, isn't something that is as important as housing starts, which we got today was 123 million versus the expected 119 million. So more housings or more new homes being built. So that is a sign that the overall economy is starting to pick up maybe. And then we also got Philly Fed manufacturing, which is a little bit in line with what we get from the Chicago Fed, Empire State. We got the Empire State yesterday. It was a little bit lower than expected, but Philly Fed surprised me to the upside at 23.6, was expected to be 16.3, so better than expected on that front. Then we also got unemployment claims for the week, came in lower than expected at 234,000, expected to be 252,000. So less claims on that front is generally a sign of employment happening, or those people coming off of the unemployment. Sometimes we get discouraged workers, which they just stop, they fall off of that list. That's something we have to really look into on the non-farm payrolls number. But if you're a discouraged worker, it means you're not really working, then you fall off that unemployment claims list. So that you really have to dig into those numbers there. Then we also have housing, we talked about the housing starts. Natural gas storage came in a little bit lower than expected at 243 billion cubic feet. Then crude oil inventory surprised the upside, came in at 2.3 million barrel build, was expected to be a 0.1 million barrel build. So 2 weeks in a row we've surprised the upside on these crude oil inventories. So overall crude oil was down a little bit more on the morning after that data. We had a bigger sell-off, just slightly in positive territory right now at up about a dime on the day. Later on today, we also have Janet Yellen speaking. That's later on tonight, if you will, at 8 p.m. Eastern. But on to the other markets, we've got gold futures coming back off. Remember, I talked about this. I thought that gold was kind of a little bit exhausted to the upside, and that we may go up and test that 200-day moving average, but I wanted to be ahead of that a little bit, being a contrarian, and sold GDXJ. Still have that trade on for being an overall short in gold. Another key thing to keep in mind, we've gotten below that psychological level of the $1,200 a troy ounce. So the next thing here is we've got these two lines here, the 50-day and the 9-day moving average, acting as support right now. We did go down and test that earlier today, but a key real level for the bears in gold to bunk the bugs is to get below that level right there. So keep that in mind going forward. Right now it's acting as a nice support that the bulls are defending. Then on to the bonds. Bonds down again now over a point, almost more over a point and a half, if you will, but a big sell-off yesterday. We talked about this. The support level went up and tested the resistance of that 50-day moving average, then came down, actually settled below that 9-day moving average, and now the bears are in control of this market. The market really coming off quite a bit today, despite the fact that the overall equities have not made much of a move. But I think that this is more due in part to some of those better economic data points coming out. Dow Jones Industrial Average still fighting, but down about 40 points right now. I talked about this. We're starting to see a little bit of bearish tone coming in here. The market's starting to peel over, and I think it's still going to look to go down there and test that 50-day moving average before we start seeing any more upside and really testing that 20,000 mark when everybody stops talking about it. Although we did here, as you can see in the NASDAQ, up just a little bit on the day, but overnight made a new historical high, and the overall markets then started coming off. So it'll be interesting to see if they can print that today. E-mini S&Ps showing that mixed bag of what we've been seeing over the past several weeks, where NASDAQ may be up, Dow down, E-mini S&Ps down. So big sector rotation going on, but right now with the E-mini S&Ps down just slightly on the day, so nothing really to talk about. But again, looking somewhat like an inside day, despite the fact that we do have this level just a bit outside. As you can see, these are the overnights. Markets. We did print that high just as the markets open, but have since retraced and come out again. So be interesting to see if we can come back down and settle outside this line, because if it comes back up inside there, we'd easily want to see it come back up in here for a day trade type situation. But really, if you can look at this, that looks pretty close to inside days for the last several days, from basically Tuesday was the bigger range on that. So just an inside day for the whole week, pretty quiet. Now on to Netflix. You guys remember me talking about this yesterday in the daily market commentary. I like to put on my trades for these earnings in the afternoon, probably anytime afternoon, and better yet after 3 o'clock Eastern time. That's usually when I like to do that, because it gives me a solid range to pin around that. I like to hit the standard deviations on that. So I like to wait till it's pretty close to the end of the day in order to get that clean standard deviation on either direction, rather than putting it on during the day and having to worry about my standard deviations and deltas changing from when I put that trade on. But unfortunately, what happened yesterday afternoon is we got here a natural gas scare. Actually, there was somebody was digging and putting down cable for internet and TV, and they struck a gas line, so we had to evacuate the area in a sense. So I wasn't able to put that trade on. So just moving forward, got to keep going. It would have worked out quite nicely. I hope some of you were able to take advantage of that. Remember, I talked about doing the 148 calls and the 118 puts, selling that strangle in there. That would have worked out great. I mean, collecting $2 and some odd cents for that trade. Today it would have been worth about a dime, so that would have been a home run in my eyes. So going forward, looking at a couple other trades tonight, we have IBM, and then tomorrow morning we have Procter & Gamble, GE, and Schlumberger. Probably going to lay away from the GE, Procter & Gamble, and Schlumberger. They just don't have that high implied volatility that I usually look for. IBM's right on the cusp of it. Going to be pretty close to what the market maker move on that is. Whereas with Netflix, it was brilliant because it was way outside the market maker move to be able to sell that strategy and collect a very nice premium. So keep your eye out for me on Twitter at Wolfman's blog. I'll be tweeting out which ones of those I'm going to be putting on, but it's going to be a game time decision as to what I do there. All right, that's all I got for you guys today. Other than Fridays, we got the webinar on the put butterfly. It's going to be a short put butterfly, and I talk about this all the time. You can just listen to some of these other guys out there. They're just going to tell you how to set this strategy up. but they're not going to go into any major rules that you need to do to be successful with the strategy. You can set it up where you're not successful. I'm going to show you how you can peel those probabilities in your favor in order to increase your success rate, all right? And increase your yield in your portfolio, hopefully. And can't take that? Take it easy.